Okay, I wanted to make a video about broadening formations and how, at least for me, the concept of broadening formations completely solidified everything I was already doing in trading and kind of took my understanding of price action to a whole new level. And again, this comes from the strat, and I've recommended many times on my videos or in my comments that everyone, in my opinion, should learn the strat and its principles. And the main principle in the strat, I mean, there are a whole bunch of things, but the main thing that Rob Smith discusses above and beyond everything else is that broadening formations exist. And, at the beginning, that was great. And, most people, when you hear that, you look at a chart. This is a daily chart of the SPY, and you kind of draw the higher highs like this and the lower lows, and broadening formations exist, and price starts to go up and down. And you think that every time, price goes up and down, that makes a new high, then it should make a new low, and it can, it should go on forever. But obviously, that doesn't happen. There are smaller time frame broadening formations that expand into bigger time frame ones. Sometimes they don't, reverse completely. But it's this overall concept that everyone, I think, initially thinks. That's what I did at first when I was reading about it. But then as I really thought about it, a whole new way of looking at broadening formations really came into play. Very simple, and it really, like I said, changed the way I view the market. Again, I was always, prior to the strat, I was always looking at multiple time frames. This is the daily chart, the weekly chart, a monthly chart. I was looking at green bars and red bars and midway points, and it allowed me to trade fine, just without, just kind of looking at being, having time frame continuity on my side. That's a weekly chart. But I never really, had any idea about this broadening formation concept. So once, I grasped what this is all about, it really changed the way I view things. So let's just kind of quit. This is what I wanted to do here, is just simplify it in this kind of way, and then see if this maybe helps out, others in terms of the way, you look at things as well relative to your trading style. So a broadening formation, and this was kind of the key thing that hit me. This is a daily chart, and I drew some bars up here. Obviously, what I'm showing here is a 2 up, 2 down kind of move. This example is an inside bar, and this example is an outside bar here. And those are pretty much the three things that could happen on any given chart, any given time frame. But here's the thing. So a broadening formation, in the most simplest of terms, is when a stock makes a new high, daily high like this bar, and then makes a new low. It should target and hit this level here. These two bars are a broadening formation of that bar, and that's it. Just keep that in mind. So what happens is that anytime you see a down bar, now obviously there's bigger picture context in play. If this is a down bar and you expect it to hit this level as a compound broadening action of this one bar, maybe you'd want the bit higher time frames to be down also if you want to take that trade. But that's a whole nother topic. Just forgetting that even, here's the thing. Let's say price makes a 2 up and then starts 2 down, and I'll kind of try to redraw this if I can do it quickly. Let's say it doesn't reach its target, and then the next price bar makes a 2 up. This is exciting to me because it didn't broaden like you expected it to. Again, that's the whole thing with broadening formations. They do exist. They happen all the time. That's part of the nature of price movement. If this doesn't broaden and then it makes a 2 up, a much higher probability exists that this 2 up is going to reach this target right here. In other words, a failure to broaden is just as exciting as taking a trade where you expect it to broaden. So when I go through the daily chart, and if I can go through it bar by bar by bar, I'll show you how these concepts kind of play out. And the other thing is, while I'm at it, let's put this away and show, again, keep in mind, this is the broadening formation. Anytime you see a 2 down, you expect it to take out this low for a compound broadening action. The inside bar, when you get those, all that a broadening formation means here, and it's not really a broadening formation, is that if you break to the upside, you just should take out that high. I generally, when I see these bars, I'm looking for failures. I'm looking for a move up And then when it fails, you kind of get a 2 up, 2 down, and then it comes to the bottom end of that range. Finally, on any single day that you have an outside bar like this, that's a broadening formation in itself. And all that means to me is at that point, you've already broadened. So are you going to reverse back to the downside, or are you going to continue maybe a higher time frame and higher? So I'll show you how on the daily chart, when you kind of view this concept in here, how you can tell if this single day might be broadening higher or if you're going to fail and come down. But anyway, so if we just go day by day here, this is May of last year. I just happened to went to that area, and at the time on the weekly chart we were going down. See, that's the thing, you start combining the different time frames. So here we were 2 down, 2 down, 2 down. May was definitely on the downside overall. There was no upward no 2 ups here on the day on the weekly chart. So your continuity is always to the downside. So let's look at how each day kind of plays out, what I was just explaining. So let's just take this starting from this day just randomly. This is you get the 2 up bar right here. It should take out that high. It meets its objective. Then you get the 2 down bar. All it has to do here is these 2 bars have to take out that low, and it meets its objective down here. And since you have another target in play, it kind of, this is that liquidity target that I mentioned in my algorithm videos. You can look at that. It goes down and reaches that. Anyway, then you get, let's look at each day. This is a broadening action by itself, this 3 bar, right? So now you're saying that just on a single day, are you going to continue or reverse? Well, this next bar you don't know, because it's just a 2 up bar, so that's fine. Then what you see is the potential 2 down bar, but when it doesn't reach its target here and then starts up, this is exciting relative to the fact that this 3 bar was kind of your reference point. And once it starts up, there was your signal that this bar was going to broaden on a bigger time frame higher. And once it goes up, let's say you took a small loss, you went short thinking it would come down here, but then you reverse right here. You know that relative to this 3 bar, it's probably expanding, and then you have a much bigger, if it's going to expand on a shorter time frame, it's going to the larger time frame target up here. So anyway, it comes up, it hits its, this 2 up. All it had to do was hit this previous bar, which it did on the next day, but then it worked its way up to that higher liquidity target. Now in here, this is a kind of an interesting thing too, and you do see this every so often where price generally, what I'm trying to show here, I can go day by day and show you how this 2 down reached this, it didn't reach the target, but then it became a 3 day, I think. Anyway, you got 3 inside bars here. These bars in here, these inside bars, it failed to go up to that target. It then gave you another, it was all 3 inside bars, and that's why the breakout was very powerful to the downside. So when you see 1 bar, I'm expecting maybe a failure and then to continue the opposite way. When I get multiple bars inside of a bar, then at some point that breakout is going to be normally powerful. So it comes down, 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 down. Okay, here's the 2 up bar here. It took out that high, which all it had to do, these 2 bars are a compound bar, this bar, and then what did it do? You see these gaps in here. I talked about that, how the 2 things on the algorithmic trading is it takes out liquidity areas, which obviously this big move down, I didn't point that out, took out this liquidity here. And then you get the 2 up day that just kind of goes into this rebalancing area. That's a resistance area. And that's all it does. Then the 2 down, this takes out this target here. And then you get a 2 up that all it had to do was take out this target here. It did it. And so on and so forth. So I can keep going, that's the type of thing I'm looking for, is on a day-by-day basis, this 2 down day, all it had to do was take out that target in here. But when you see certain failures in play, I'm trying to look for an example. Obviously, these 2 up, so for example, here at the bottom, when it takes out the liquidity down here, then you have a 2 up, it gapped up. All it had to do was take out that stop. When you see kind of a pivot machine gun, that's another thing, a whole bunch of pivots in a row, then there's a good chance this move that all it had to do was take out this bar could work all the way up to that bar. It takes it out. So anyway, let's see what happened just here. It comes up. Here's a inside bar. Again, I'm looking for failures on inside bar. That comes down, takes out its area, which is, that's all it had to do on this bar. But then you get that back 2 up. And at that point, that to me is a failure of this bar, which means we're going all the way to the top there. So then we see that up, up, up. day by day, the SPY, again, this 2 down bar, all it had to do was take out that low. Now this is getting tightened here. So, it seemed to fail to take that low. Then the 2 high, all it had to do was take out that bar. It did. 2 up. Then here's the inside bar again. It came down. It seemed to reach its target. That's all it needed to do, and so on and so forth. And you just go, there's a lot of, if I go to recent kind of trading, there's a lot of really easy days to kind of watch this developing. Again, here's the 2 up bar. It's expecting to take out that high. It does it. Okay, here's the inside bar. I'm looking for the failure. So we come down. All it had to do, this inside bar, is take out that low, which it did, but then it closed green. So then it was a pretty strong probability going back to that high. Here's a perfect example of a trend type of move that's going to a higher time frame. You come down on the 2 down. You don't take out your target. You immediately get a 2 up. That obviously projects to this high here, because you could see here this 2 up bar. Well, what happened was it didn't reach it on that day, but then you got there, you have like 3 bars where the compound broadening action of that 1 bar, and you went up to the highs. And if you were looking at the bigger picture targets, that was kind of what was in play. Anytime you get a trend, you're going to see certain broadening to the downside that fail and then continue higher. So, that's the way it works there. So again, I just wanted to point out, if you look at the daily chart this way, and always are just kind of expecting all the 2 downs. Let me see if I can go back to that original diagram I put in play over here. Expect all your 2 downs to reach that bar here for compound, an outside bar or broadening action. These 2 bars broaden to this 1 bar. And when you see 2 ups, expect, let's look at it this way. When you see a 2 up, you expect it to reach this high here and compound, broaden out to the upside, like that. And if you get that, fine. That's all price is expected to do. And if it doesn't reach it, if somehow you get a 2 up bar here that kind of just doesn't reach it, get excited to go back with the trend, because the very high probability you're going to hit this bar and maybe even a lot lower. And again, it's just kind of an introduction here to the day-by-day price action of what to expect. And you can almost just trade based on this basis. So if you see a 2 up bar here and you're expecting to take out that high, you can look for intraday signals that, work towards that level. And when you see failures, you can certainly get excited when you see a 2 down bar. The next day opens up down, that you're going to hit this level, and you can look for all kinds of short opportunities. So anyway, it's an introduction. Keep it in mind. I can go through a lot of charts and show you some great examples. It's especially exciting when you combine the weekly opportunities. You look at the bigger time frames and you're expecting, you can kind of meld it all together, where when the weekly chart is expected to go down and then your daily chart maybe has a 2 up failure and then aligns back with the weekly chart, that's a very powerful signal. So kind of keep that in mind too. I don't want to get into it too deeply here in terms of how the weekly chart then aligns with the daily chart, but a lot of times that's really a great way to analyze where price is likely going next. And again, everything is just breaking the high or low of a previous day, and that's kind of where you start from. And the concept of broadening action, I'll just I'll end it like this. Again, always kind of expect, because this is what price does, that price is going to broaden. And that's all price has to do when it makes a new high, is go to its previous high, and just these 2 bars, have a compound outside bar of this. And that's what price is all about. And once I kind of, grasped that, and then I was able to kind of put it in the context of these bigger, broadening formations by looking at the weekly chart, what those targets may be, it all, it really, like I said, solidified a lot of things that I was already doing. But, it's something, again, I recommend everyone kind of go, and there's so many free videos out there about the strat and its principles, and I think it will really help anyone, that's whatever your methodology is of trading.